Yep. Yo, mic check. I am on the live. I am running behind time, ladies and gentlemen. I do apologize. I absolutely apologize. If anyone is there on the live with me, please uh, give me a shout out. Let me know that you can hear me loud and clear. Let me know that you can hear me loud and clear, and then we can start. Today is the 21st of February, Monday, President Day in the United States. Today is a public holiday for the stock market, and I'm going to be talking to a little bit about that, what that means for most of us as traders, and how to go about navigating such a market. Futures markets seem up, okay, but that obviously could mean a lot of things. I suspect sentiment. I suspect, there's a pullback with Russia. That's kind of like where I am around this. Thank you, Bongi, for the confirmation of sound. Right. So just so you know, if futures go up today, they will go up, but the actual stock market is closed. Right. So stock market will open tomorrow. Right. So, and that could have an impact on your particular trades. Now, I saw some headlines that I think we should talk about. I saw this picture, as I was getting ready in the morning. So Biden agrees to meet with Putin in the principle if Russia has not invaded Ukraine. So this is obviously bullish, right? Remember, for the most part, fundamentally, it is difficult to imagine a world where we have World War III ever again. It's very difficult. It's also quite naive to say that because there's a war somewhere every single day. There's a war in Yemen. America is not done with Afghanistan. Iraq has been in a long-term war. There is a war in all sorts of places in the world, but I'm talking about a massive geopolitical pool of a war. So this is good. The markets are happy. Right now, again, the markets were happy last week when it seemed like these guys were going to call it quits, and then Russia was pulling out, and then Russia did not pull out. So just be careful of this. I'm done trading based on temporary sentiment right now. I'm going back to my usual play card. I am a long-term swing to positional trader. What happens every day does not affect me and should not affect me, right? So this is a crazy article. I haven't read it yet. I'm just looking at the head like next Bitcoin bull run won't happen until 2024, right? Just be careful about this fund, right, guys? Remember, institutions need to push price down. And when you sell your asset, you really help, right? And I'm not your financial advisor, but if I had Bitcoin, if I have crypto, the ones that you have and hold, I'd never sell them. I'll protect them. I would not sell them. I would hedge against them. I would not sell the assets. I would trade in sales, but never sell my asset, right? I would never betray the inheritance of my children's children. That's what digital assets are. Just remember that. Right. So Germany Chancellor rejects calls to sanction Russia. Remember, I talked about this. Those of you who came for the war room yesterday, I said most of these European countries do not want any sanctions that are going to result in anyone touching the energy sector. Nobody wants to have an inflation problem like the United States. Reflation trades are starting to work again. And this is simply based on the fact that we're risk on, right? The more I do this, guys, I promise you it will sink. The more I do this, I promise you it will sink. I'm going to be 30 to 40 minutes today. I do apologize for running late, but just off the bat, because this is going to be an everyday thing for me, morning live sessions, I just want to be very clear on what I want us to do. For those of you who are really committed to this process, it'll benefit you so much more if we take these live sessions and we only focus on a set of charts for the whole year. For 365 days, I want people, including myself, because I'm going to be refining my own art here, to become more skillful in specific key charts. Now, the morning sessions that we're doing, before we get too deep, just a kind reminder, are tracking the London session. Most of these trade ideas obviously spill over into the New York session in the afternoon. Right now, I'm in South Africa, so I'm talking about the 9 a.m. up until 2 p.m. time zones. If you're in Kenya, then you're looking at about 10 a.m. till about 3 p.m. This will change, as markets go through what they go through, specifically time zones. You'll start to see that the New York session will start to open later, and we'll talk about that when it comes. Now, between now and the change that I want us to see in the markets, this is what I suggest we should do, right, for this year. I am trying to get this tool to work. Okay, I don't want that. But if it won't give me text, then we'll move on. Right, so I want us to master the following charts: AUD, USD. That means every day in the life for the next 365 days of your life. Okay, Monday to Friday, there's no market openings on weekends. We'll be looking at AUD, USD consistently. Then we're going to look at Euro USD consistently every day. I'm going to be looking at price openings for the London session and most likely spill over into the New York session for the day. When I look at pound USD, I'm looking at very liquid charts that actually move a lot during this time frame, right? So you definitely want the euro, you definitely want the pound in the London session, right? When I look at USDCAD, this would be so much neater if my tool would allow me to use text, but it won't. And I don't want to spend time trying to figure this out. Right, that's 4 charts, and then we're going to look at EURJPY because this is already a good trade from our war room. So we might actually get some opening sometime this week, and what a nice way to keep track of it. But because it's the London session, instead of being obsessed about NASDAQ, man, come on, everybody, that thing is predictable and boring. Let's master the Ftse 100. The Ftse 100 is the top 100 index in London. Every single institutional financial markets trader who is brilliant right now, their eyes are on Ftse. The London market is buzzing on the Ftse. What I like about the Ftse is a lot of its attributes trade like a currency. That means you can sell and buy. I believe that most indexes are buy profiles. Ftse 100, it's a mixed breed, right? If traders are feeling off, they will sell, and you can make a lot of money selling and buying. The DAX is the last one that I want us to look at. The DAX has the most vibrant and honestly, in their true nature, most aggressive traders being the Germans. The DAX 30 is one of my most favorite violent things to trade. So we're going to look at London, Euro USD, AUDUSD, EURUSD, Pound USD, USDCAD, EURJPY, Ftse 100, and the DAX every single time. I'll link all of this to whatever we find in the sentiment. Then I'll bring it back to the charts. These are the only charts we will run through as quickly as possible in that 30-minute segment that we have today, because I've spent so much time explaining this, right? You're going to bear with me. I'm going to go over time by about 10 minutes. But for the most part, this is the plan, right? I hope everyone is okay with that. And then other big charts, then we can cover those things in the war rooms. I promise you, after my crypto review this week, please remember, I am going over a crazy crypto review Tuesday, Wednesday, and Thursday. I will then add, if there is interest for those people who actually actively trade cryptocurrencies, we can add 1 or 2 crypto assets, 1 main coin, 1 altcoin for trading on your popular platforms. You will have to tell me which ones those are. I really don't, I trade most of my crypto in the New York session. I can add, 2 cryptos so that we have a nice basket that we look at every single day for a year. You'll see why that's important. You'll start to see patterns. Right. So, and those of you who don't know, Wealthy in 3 Years program, the second financial note since its launch in October goes out in about 9 days. I am finally ready to get in because what I've been waiting for, what I've been telling you guys is going to happen is starting to take shape, right? Because some aggressive downside movement. We are a little bit risk on today. We did hit, an H4 demand yesterday. I told you guys that retail traders are going to jump on it. Yesterday, those who came to the war room, right? And there we go, made contact with the demand. I have no faith in this rally, right? I really couldn't be bothered to be in it, but we shall see. We shall see how price behaves. H4 demand almost made contact right there. 365 candle, bullish engulfing, whatever that's what's at work right now. Approaching a Talitha area as usual, just multi-one basic stuff. So I'll be watching this chart this week as I cover a lot of crypto stuff. So if you're not yet subscribed on our channel, please make sure you subscribe because you will not want to miss out what I think the future of the crypto markets are. And you might want to consider joining the Wealthy in 3 Years program as soon as possible. Right, guys, let's get cracking. So we've got risk on, right? Largely the war, right? You can see in the futures market, there's really not much activity. Yes, it's almost as if markets are like, yeah, we're going to take today as a break. It's the President's Day, we're on holiday. More importantly, we do not believe you, right? There's such a serious, strong lack of conviction here in the markets. Look, Dow is down, SP 500 still down from Friday, Nasdaq still down. Futures markets generally should react even in pre-market opening. Look at the futures now. So that was actual markets last week. Now this is the pre-market open. This is the futures market. There we go. So there's that risk on. There's that risk on. And I just want to compare. So we up 0.86%. And we closed in the negative 0.68. So it's not really a big jump. I still stand. Prices was at 34,079, and in the pre-market prices at 34,309, right? So it's not really a big jump. It's really not a big jump. So Dow literally lost over 200 points on Friday. The day before that, Dow lost about 600 points, and now it's almost recovered about 300 of those points. Like that's pretty much all that it means, right? SP 500 a little bit up, Nasdaq futures a little bit up, right? So markets are really taking in this good news, I guess. Oil is down. Why is oil down? Because if the tension cools off, then oil will come down. Bearing in mind, if you're a long-term trader, we've got that long-term target of 100 US dollars. Right. Quickly, Euro USD nudges higher as Biden and Putin meeting possibility brings about hope. Right. So risk on. Risk on. Bitcoin, biggest collapse in a month. Yes, that happened last week. It was the biggest collapse in about 4 to 5 years, right? Continuous lows. We know this. We predict this a while back. It's PMI day to day. This is really focused on the German data. I spoke about this in yesterday's War Room. Please check out that video. I just don't want to waste time and repeat myself. It's a long weekend in the United States. Like I said, markets are closed today. They'll be back on tomorrow for the stock market. So US markets, you can trade futures if you know what you're doing. You better be in those buys right now. But you also need to know when to get out, right? You need to absolutely know when to get out, right? Risk is in a better mood ahead of European Open because of Russia, right? Recap: BOJ, Bank of Japan, BOJ Bank of Japan intervention in JGB's last week's way to now is basically interest rate stuff. I don't think they're going to increase theirs. Japan thrives on low interest rates because of its safe haven characteristics. Potential Biden-Putin summit gives risk a lift, so we're still risk on. This is all headlines from today, 6 a.m. Monday today. Biden has prepared an initial package of sanctions against Russia, right? So clearly America has a plan B in the event of the Russian military invasion of Ukraine. A lot of European countries are not pro-sanctions because they don't want the energy sector touched. Right, there's an earthquake in New Zealand, right? This is going to be, unfortunate. I hope no one got hurt, but it's going to be a little bit of a risk off for the NZD. But remember, NZD has a big week ahead. So on Wednesday, NZD has got the official cash rate hike, the Reserve Bank monetary policy statement, so their own power will be talking, whether it's hawkish or dovish. So let me know if you want me to cover this. I never really care about, all the countries, otherwise my mind will explode. But if you do want me to just teach on the fundamentals, I'm happy to do that. There'll be a rate statement and a press conference. So exactly like how Jerome Powell would do that. So it's not a great start to start off with an earthquake, but I'm pretty sure that we might see some strength in the New Zealand dollar. At least that's what I think might happen. I'll have to look at the data. US weekend oil news: upcoming federal oil and gas lease sales will be delayed. They have to be. Price has been skyrocketing already, plus the war, etc., etc. Bank of New Zealand see New Zealand government bonds inclusion in the YG. I don't even know what that is. Don't even ask. I don't know. What I don't know, I'll always tell you guys. New Zealand Prime Minister flags an easing of restrictions was COVID-19 wave peaks, right? An easing of restrictions. So that's also very good, right? Because then businesses can open, no more masks, all that kind of stuff. Please move this window away from the shade application. I don't know what's going on. I apologize. I don't know what's going on. Something on the other side. All right. Okay, fine. There we go. Right. And I think we can stop there. I mean, for the most part, this is during the Asian session, right? China's new home prices rise. China's got a housing crisis. We covered Evergrande last week. Public Bank of China setting the exchange rate. People's Bank of China leave China's loan prime rates unchanged. That's interesting, right? Remember, Asian markets happen while we're asleep, 2 a.m. midnight up to about 6 a.m. So a lot of this is important. They're the first to get the market started. But you'll see in module 3 when I talk about accumulation phases in the markets and I link them to which sessions. So that's why I fundamentally love trading the London session. Right, unconfirmed report, Putin has ordered an invasion on Ukraine. This is 3 a.m. So at 3 a.m. there was an unconfirmed report that there's an invasion. At 6 a.m. there was a confirmed report that Biden and Putin are meeting, which suggests that there won't be an invasion. So like I say, guys, stick to your supply and demand because this is crazy. Reports that Biden and Putin will meet. So this came out first that they're going to meet. And then an unconfirmed thing came out saying they're going to invade. Someone is playing with our minds, right? So let's leave it at that, right? And then news doesn't really affect us except for the news of the day. Because remember, we're just looking at so this is already about to drop PMI for Europe, but that's weak. What's going to really rock Euro markets today at 10:30 in the next 45 minutes is going to be the German flash manufacturing PMI, right? If it's positive, euro might be strong. If it's negative, and really negative, so really below 59.6 and slightly below, I'd say even 5900. If it's really low, then euro might tank. Euro might feel a sense of weakness, but that feeling will be competing with the current risk on sentiment, right? If that makes sense, I really want to move on. Right, guys, this I showed you guys last time, one of my war rooms. Right, this is called as client sentiment indicator. At the end of the video, I will make a note to put this in the description, the link. This is a skeleton of how most of my trades play out. Right, this is contrarian to the view of the market. And what that means is, okay, let's read it. Use this client sentiment data for popular forex market and see what other traders are going long on short. Go into an instrument to see an update of the chart comparing the market sentiment with the price. Now, be very careful about this. I come here to see where money on the table is at its most imbalanced. I don't come here to get trade ideas. What the sentiment indicator will tell you is that when it comes to the popular pairs, popular currencies, and there's a bit of indices as well, by the way, and commodities like gold or silver. It'll tell you that based on their data is based on several brokers. Not every broker in the world, but one of the most popular brokers, etc., linked to retail traders' accounts. Remember, my entire trading strategy is I don't want to be dumb money. I want to be smart money. To be dumb money, I must do what dumb money does. To be smart money, I must do what smart money does. What this client sentiment indicator does is it tells me that based on the brokers that this data is being pulled from, most retail traders are either mixed on AUDUSD. So 47% want to buy, 53% want to sell. I'm not interested. EURUSD, 45% want to buy, 55% want to sell. Kind of interested, but not really. Sometimes I do nothing. This is nice. See, USDJPY, because there's a nice strong imbalance. Price is not evenly split. 61% of retail traders want to sell, while 39% want to buy. And then 9 out of 10 times, generally speaking, from a contrarian perspective, I want to do the opposite of the majority of the retail traders. So if retail traders most want to buy, I want to go find some sell setups, because if I know dumb money very well, dumb money is almost wrong 90% of the time. So look at this, for example, a beautiful way the sentiment indicator will look. It will say Euro Swiss franc, 77% want to buy. 77% want to buy Euro Swiss franc, but 23% want to sell. Therefore, the contrarian signal is bearish. We want to go against all these longs, all right? But it's not as simple as that. You don't then run to your charts, to your platform, and go Euro Swiss franc, sell, right? You want to go bearish, because most retail traders are long, right? And what we then do when we come to that is then we start to slowly decide for ourselves, well, when is the best time to go short? When would be the best time to go short? I can see Euro Swiss franc, we've already marked a sell point here, and so we're waiting for that. So this simply just lets me know where the mind of retail traders are. I keep track of them because I want to go against them. I want to oppose them, right? So euro pound, there's a lot of buying. We want to go bearish. So it looks like for euro, there's a bearish sentiment brewing, right? And then you can spend some time you want looking at all this stuff to generate a whole lot of trade ideas for you. Be very careful. Once again, this is our Ftse 100. It's quite mixed. When things are mixed, right, there's no imbalance. Money is too evenly spread. You want to find the imbalance. This is just to help some people, especially if you're not in the academy and you want to understand why our success rate is the way it is. Maybe this might help you. We always do the opposite. So it'll give you a nice summary here of trading opportunities. USD Swiss franc, the signal is to sell. And that's because 83%, when it comes to USD Swiss franc, 83% are already buying. So we want to use their money as liquidity, right? This is literally a skeleton idea of how smart money thinks through price. It's obviously more complicated. You obviously have to find the right thing. You can see why. You see, this is beautiful. This is artistic. Look at this. Most retail traders, based on the data of their live accounts today in the morning on Monday, are trying to buy. If you've done my course, you are looking at these people like they're absolutely crazy. Why are they crazy? Look at this. Price made contact with the supply that we spoke about in a previous war room. Markets rallied up. They saw this as bullish. Markets pushed down. If you look very carefully, all across here is a support. So they are all trying to buy right now as we speak. A 365 trader, one I've taught, would know take profit is still all the way down there. So you hold yourself. So because we are intraday traders in these more market live sessions, we quickly want to go to the 15-minute time frame. We'll start from daily. This is not even one of the charts I said we should be looking at. But since I'm linking it to the contrarian indicator, I'll show it to you. So on daily, we know the direction is supply. Supply prices leaving a supply going down to a demand. Prices not made contact with the daily demand. Therefore, supply is in charge. We treat our daily supplies like our governing supplies, right? So daily is in charge here. Price is going down. This is the creation of a daily PCP. Also next to another strong bearish supply on the daily. So we start to drop to H4 to find a way. Prices left us. But I hope you guys get the sense. Prices left us, man. I mean, H4, I can't find a clean entry. I cannot find a clean entry to save myself. I mean, it'll be a little bit, hopeful to hope that price returns somewhere here. Yes, this is possible too. I just don't like, I never like the most immediate areas of value. Anything that looks too easy, I generally try and avoid, but that could be a possibility. Just pop in. Oh my goodness gracious. Look at the market opening. Retail traders, all of them putting their money against USD to buy. And look at how the London session opens, right? Strong candle at 9 a.m. Really exhausting all of this. Remember, for retail traders, all these rejections, all these wicks here, the textbooks teach them this is market rejection, meaning price needs to go up, right? And price probably will go up, but only after they are done taking out every single person's stop loss. I think price will still go up, but only after they are done taking every single person's stop loss. Now we could do something like this on the 1 hour time frame. We could assume a couple of things about price. We could assume that price is going to come back and do a retest here, which is logical for the 1 hour time frame. And then we can say, well, because of that, why wouldn't price come and tag this higher supply there? So for me personally, if I was to take this trade, I would be waiting here, bearing in mind I don't like any of these trade setups. Too close. I'd rather wait here. If I was to take this trade seriously, I'd rather wait here. It's just that this is an intraday London session trade, right? You want to be in and out by the day. So for me to believe that price will climb, and it can if it wants, for me to believe that price will climb about 55 pips in the London session just to come for me is actually possible. It's actually possible, but more importantly, it's the most probable thing according to our strategy. So I'm going to sell here, despite the fact that most people will try to sell down here and they might actually be successful. I'm not even messing around with these idiotic levels. Look at this, massive rejection on the upside, massive rejection on the downside. I suspect that price might remove this area of value and then hopefully fly to come get me here. And this is not really the chart that we want to focus on. But basically, this is how you can use this client sentiment indicator. If they go bullish, go find the signal. Make sure it's in line with the MTA process, right? So I've done a bit of teaching, which is not really the point of these morning sessions, right? But for the most part, let's quickly scan the markets now, the charts that we are supposed to be looking at. But I will add to my notes there, potentially go put a pending order on USD Swiss franc, and then we'll see how that plays out. Right, so the first chart we want to look at in market opening is AUD USD. Right, so price really has been doing, why is AUD strong again? Well, number one, they've weakened all the supplies. They did that last week. Number two, there's risk on sentiment on the table, right? That Biden is going to save the day, just like a typical American Hollywood movie, right? And that awkward time when, you know, America is just really at the front and center of most wars, right? So daily time frame, just to get a picture of what it wants to say. Well, we want price to come up anyways because we want to try and sell here. Right. So AUD USD, I don't necessarily want to use my own money to push price up, to be honest with you. I don't think I want to be in any bias. I'm scrolling down to the 1 hour time frame. I'm seeing a strong commitment to the upside. It's actually beautiful. 15 minutes chart looks something like this. I'm going to drop Hakini Hashi candlesticks. And then I'm going to imagine that on the 15-minute time frame, if the bulls were serious, if we're really risk on sentiment like this, is there an order block on the 15 minutes that could help me if you wanted to buy? So it would be this one. Dear Cowboys, if you want to take this buy, it is yours. I am not interested in buying AUD because at the back of my mind, I haven't stopped becoming a swing trader. I know there's more money in this asset in selling than buying, right? So if markets come here, you know, then you should know. But always know, the problem with retail trades is you hold a trade, you're in money, and then you lose that money. You never know when to get out, right? So you want to understand at least the profitability, right? So if you were to look for 1:3, it would look something like this as a bare minimum. So basically, 61.3% on the 15 minutes chart would need price to come back a little bit down here and then markets to go back up here with you. And that could be a good win. You would delete all of this because you know for a fact that price has broken that supply. But you also note the fact that when price did that on the 15-minute time frame, there's something very, very solid about that 15 minutes bearish engulfing pattern on the other side of that trade, where intraday traders last week, Friday, you know, made their stance, right? We can check on the left if there's anything we've missed out on. It's that 15-minute supply I kept, you know, raving about for 2 weeks. It's finally been broken. It's done its job, and it made a lot of people a lot of money if you took it, right? But now it's my humble opinion that this 15-minute supply is now exhausted, and we can no longer put our faith in it, right? So anything above that white line means the supply has been tapped. If it's been tapped, we ignore it. And anyway, it's a PCP. So after a first touch, there we go. It was tapped, brought price down, and it's now been ignored. Right. So this is a good place to exit. Right. Now, price coming from this level could potentially break this supply, which means you could turn your intraday trade into a swing trade and go all the way to where I want to sell on the daily. Right. You could also see a different situation today in the next few hours where markets maintain this bullish momentum, break, and then do that, right? If it does that, there's definitely a pattern I don't trade. I never trade a broken supply into a demand, right? So if I was to wait, I would wait potentially here for a short-term buy and see. I don't, like I say to you, full disclosure, me generally, personally, I'm never really interested in using my money to push a trend up. If a trend wants to go up, it must go up without me. There's no confluence in that 15-minute buy on the H4. Be very careful. Is there confluence on the 1 hour? Not necessarily. Be very careful, right? That's literally the thing about intraday trading, right? Most of these levels are very small and untapped. So you're literally relying on just a fib, a good tool. On the H1, no confluence, no supporting order blocks. Finally, 30 minutes, nothing really, nothing. Like smart money didn't leave a landing pad. This is a very high risk buy. I'm saying this because I want to be very clear. Very high risk buy. You need to, if it works for you, don't forget to get your money because they could use it to break and have a very healthy stop loss. A very healthy stop loss. Right. So let's just cover this extra wick, right? And then you want your stop loss just slightly under there. Right. This is a good trade, but yeah, be careful. Be very careful. Just below 1:3, something like that. All the best. You know, if you're taking it, Leroy is not in it, but it could very much well work out. Euro USD, we should see some upward momentum again because we are risk on. Let's start all the way from weekly this time. Just to remind ourselves of something. Bullish engulfing retest. Good. This is good. This is a strong place to buy because our engulfment on the weekly has given us a retest. Markets are responding to the beautiful laws of supply and demand. We've got another daily demand here, and then price coming to retest that daily demand and creating a new daily demand. We shall see it more clearly on the H4 time frame. There we go. I'm going to remove this. This was for my 1 hour trades last week. Right, price then came set in here, exploded to the upside, breaking a supply. So this is all very promising. This would be nice. Oh, that would be very nice. But, you know, sometimes you don't get what you ask for in life. But that would be nice. On H4, that's what I've got my eyes on the H1 time frame. Remember, we wanted this thing to break out of the structure last week, and what it did was it gave us a nice clean fake out, came all the way down here to collect new buys. On the 1 hour time frame, this is what we have here. So I would even play this as an intraday trade, to be honest with you. Sorry, as a swing trade, actually. If price was to ever come all the way back down here, I promise you, I would be the happiest mama on this planet. And I would personally hold this buy up until it kicked me out, or as in, I'm willing to risk good money on this, right? Remember, there's nothing that Leroy can guarantee right now as long as there's war over our heads. If Russia throws a missile and says it's just joking, it was just a test, ha ha ha, to push oil prices up, is nothing I can do. Markets will fall, all right? But whatever it takes, this is a nice space to buy on the H1 time frame. We've got confluence from the daily. We've got confluence from H4, I think. Beautiful. Confluence on the 1 hour. Beautiful. I'm going to skip 30 minutes and dive right into 15. This is lovely, guys. This is lovely. Will price come back all the way down there? I don't know. But if it does, this is a beautiful trade. This is literally the trade as usual that you want to take home to your mama and show her what you want to marry. This is like long-term love, right, in the markets, right? Already there between where prices and right now, that's 1:4. Of course, this is a sentiment run. You can see markets didn't even breathe. Look at how price was breathing on Friday. One green candle sold, two green candles sold, right? The zigzag, that's price breathing. It's not a strong trend. This is a strong trend, massive impulse, right? So I would wait for that personally. I would wait for that and then see what happens. If I get kicked out, if the sentiment changes, risk appropriately, right? Such is life. But a nice buy here on the 15 minutes chart. And then if you remember, our long-term goal is to sell Euro USD. Our long-term goal before the war was to get back to a normal routine where markets were going to complete their cycle. So if I was to get in that buy, it'll be very difficult for me to shake the temptation to exit anytime soon up until price gets up here where I want to sell. So that's Euro USD. And then Pound USD real quick, straight to the daily. Pound has been playing mind games, right? So we did say that we want to see upward momentum long before we knew that Biden was going to sit down with Putin, because structure is everything. Just so we're clear, our prediction was price would either drop, gave us one red candle, one green candle. So it's not even going to drop this low. It's going to go straight up now, just like Euro USD, right? And Leroy is very big on not buying when price is inside a supply. Those of you who learned that lesson last week Friday, you will remember why. So I'm not really, this was the sell. This green thing here, this tag, that's the sell that we saw on the 15 minutes chart on Friday. It is not the sell of today. We are not trying to sell at that 15 minutes area anymore. It's already done its job. Right, so what we're looking for is almost a similar structure from Euro USD. One would argue that this is it. I'm just trying to see if that's a good engulfment, right? It's not the best engulfment. It's slightly outside the supply, right? So, you know, cowboys, you could try your luck here. But what you want, and I'll say this again, I will not be trying my luck here if this daily supply is not taken out. I will not be trying my luck here if this daily supply is not taken out. I just want to see, you see, inside this daily supply, this is what you need to know why this rule is important. And if you haven't done my course, do the course, because all these rules are there and they need to make sense when I'm not around you. Right, look at this. This is a bearish engulfing pattern, right? There are higher supplies on the smaller time frames inside the daily supply that still need to be handled, right? So if this higher supply that I've just put white lines on, this was tagged into that 15-minute supply, and price has come back to it a few times on the entry of it, on the entry of that 1 hour supply. Who's to say somewhere in here there isn't another 15-minute supply that we haven't seen put at work? for example, the 15-minute supply here, drop price this low, or drop price this low and then drop price that low. So you cannot underestimate the embedded supplies inside a strong daily supply. Man, I'm teaching too much. Look at this. I promised my partner would only be 30 minutes. Right, there we go. Let's go to the 30 minutes chart. So I'm going to show it to you. And I'm saying this as if I haven't seen it, but I suspect there's something there. Right, 30 minutes chart. Look at that. Clean imbalance, right? Nice. But let's go to the 15 minutes chart now, which is my final drop-down time frame. It's kind of like the exercise you should be doing with yourself. Those of you who are interested in intraday trading. Granted, my module 3 will give you so many more tools, but this is just kind of like the logic. This is all, you only need module 1 and 2. I always tell people this. Then you need to just develop a logic of price. Right, this is what it looks like on the 15 minutes. So now, if you make the mistake of just buying into an area of value that opposes you, you also assume that your 0.1 or your 0.10 lot size has the power to remove institutional areas of value. This is the beginner of this massive supply. Right now, if I tighten my area of value to 15 minutes to get the maximum risk to reward ratio, you see these lines now. These lines are now a depiction of that 15 minutes chart, and I just simply come to where price is today. You'll see that 15-minute supply is fresh. Price hasn't had a conversation with it. This whole area here is fresh. So instead of me looking for a buy on the pound USD per se, because markets are still stuck in a daily supply, what happened on Friday could happen today. Think about it this way. All our trades need price to come down back to us. Euro USD, we've got a demand all the way down there. AUDUSD, we've got a demand all the way down there. Does it not entail that there's someone waiting up here to push price down there on all those charts? Right. So buy now, just opening a buy trade now, instinctively based on news, etc., means you're using your money and you're going to run into a big problem supply, and price is going to deal with you, properly. What you could want to do, which is both equally a high risk based on how damaged this demand is, but a weak demand is not an excuse to make a buy trade inside a supply. Sorry, a weak supply is not a good excuse to take a buy trade inside a supply. A weak supply does not mean you can buy. Right, there you go. You got a clean 1:3 right there. Literally right there, almost 1:4. Right, you could be lucky. Price, however, could take this level seriously, right? In my experience, they don't, right? They would not take you. Is this clear? Is this clear? Is this clear? Is this clear? You guys see what I'm doing? Can I do a temperature check, please? If it's just students only, you'll know what I mean by temperature check. Let me know if I'm coming across clear. I know I'm spitting quick bars. My stop loss is not outside the 15-minute supply. My stop loss is outside the daily supply. This is dangerous. This is a very weakened area of value, right? Number one, don't forget that. So you don't have to take the trade. You can study the chart, right? Not all moves should be taken. Study the chart, right? But one would say, instead of rushing to buy pound USD, sell while you're still in the supply. Use the last sell orders. So this is intraday. It's intraday. It's not swing. It's intraday. It's not swing. It's intraday. And we found a fresh 15-minute supply. It's intraday, right? Markets are not just believing anything they want to believe. And so price could, with the power of the goodwill, and then by 4 o'clock today, Putin is already flying half his army out of the Ukraine back to Russia. The sentiment could change, and people be like, for sure, Putin was serious. The war is over. And then price will just take you up. It'll take out your stop loss. That's a risk you have to take. But if markets just move and say, we shall see, right? Price could do something like this. You could make a little bit of money selling down. Right, price could remove this area of value there for you. That could be a good place to wait. It also could be a very perfect place to buy one more last time. And this, if this has happened and all the supplies, H4, H1 daily inside this whole area have finally been dealt with, then this could be a very good buy out of this area of value now into the place where we want to sell. Right, so it's something that you're going to have to manage for yourself as a trader. Every day, we'll be doing the same 6 charts. So every day, we're going to be coming, and I'm going to be showing you whether price played out that way, why, etc., etc. This, for me, you'll get the best version of these sessions from me. These morning live sessions, I want to be very honest, you'll get the best versions of them next year, because I'm going to be doing this every single day, studying these time frames like this. Because remember, I'm a set and forget trader. So operating the market life is going to be a fun challenge for me too. You're going to watch me learn as I teach the stuff, right? So we're going to learn from the markets together. But this is the setup I have for pound USD. I'm not inclined to sell right now. Sorry, to buy here. If a sell was to happen, I'll risk it there. And guys, remember, what are you risking? You're risking peanuts in this small time frame, right? This area of value is 13 pips. 13 pips. That's what you're risking. If that's the case, you can even have a standard lot size. Well, I'm not encouraging that. I'm simply saying, you could have a big lot size because your area of values are small. All right. And then if you're right, you could accumulate quite a bit based on that. And that's just how it works. The better your MTA and the tighter your area of value, the more money you can make. Right. So that's pound USD done. USD CAD. I see we've got a lot of assets, and I think that's because I took time to teach at the beginning of this thing. So tomorrow, no teaching. You guys now know the drill. We just look at the charts that we've spoken about. Right, USD CAD has been falling, hitting the supply, not really falling. The only time I'm interested in buying this asset on the daily for a daily swing is down here. It's inside a supply. I honestly, I know I have no interest. I'm doing nothing on USD CAD. Retail traders paradise. This nonsense. Retail traders paradise. There's a range in markets. Resistance at the top. Someone is going to get squeezed out very soon when the breakouts come about, right? So retail traders paradise. I don't know how I did a full screen, but I seemingly can't get out of it anymore. All right, it's fine. Doesn't matter. Right, so I'm doing nothing on USD CAD. I won't waste your time on USD CAD. EURJPY is our other asset. I spoke about this trade yesterday in the war room. We really should be looking for some strong supplies, but in the short run, markets have received some really good news. So now be very careful about where you want to sell in the intraday. Intraday trends and long-term swing trends don't always align, ladies and gentlemen, but the governor eventually always wins. So in the long term, euro has to fall. In the short run, markets are being sentiment driven, greed and fear, relief and panic. If the stock market falls 20%, human beings, I want you to think about this. Your Bitcoin portfolio has been down for about 46 to something, 50%, right, in the last 6 weeks. If Bitcoin goes up today by 5%, 10%, retail traders are going to celebrate that. You have not made 10% more money. You lost 50% of your value. You have recovered only 10%. Your portfolio is still down 40. That logic is so important because we don't really make peace with that. So a short-term push to the upside does not always mean a complete change in the bigger picture. Euro in the bigger picture is still weak, but the sentiment governing the day or the week, might make it seem like that. So just because of that, I am now worried about selling here, both short-term and long-term. If Biden and Putin are playing the markets, one must be very careful. So let's see what we said. Yesterday we said, look, man, there is something going on here, blah, blah, blah. There is this bearish engulfing candles being given a fresh touch, might get a retest. But because we're looking for some nice intraday squeezes, I say we go a little bit deeper. So you'll see that my area here is aligned with this 15-minute supply, right? That's what I'm looking at. It's very much, instead of entering right here on the H4 daily, right, I would far much more rather wait to enter very much deeply inside that area of value there. So this is much more worth the risk for me. Then my stop loss, I need to figure out why yesterday in the war room I made it that wide. Right, so because I want to sell at the top of this and there's another supply behind me, I gave myself a nice wide stop loss in case price actually wants to tag, all this kind of stuff. But, given the sentiment, well, there's nothing stopping price from really choosing a higher supply. There's really nothing. That's just the truth. There's nothing stopping price from coming all the way here to say, but this also requires a retest, right? This requires a retest too. So I'm going to try my luck there and then see. I'm going to try my luck there and then see what's going on. That's my trade idea. I'm going to try my luck there and see. So this is one of those trades that from intraday could become a long-term swing trade. But if you're only doing intraday trades and you want to take your profit and go, or very short swing trades, then even exiting here to equal this low is a good thing, right? If price really does tag here and doesn't stop you out on that 15 minutes chart and all of this is unnecessary, you can quickly break even or reduce the risk, right? That'll give you 1:6. I'm leaving mine this open because I just want to see how far price will go. Bearing in mind though that it'll just be fear controlling you, right? Remember, markets have broken structure. They've closed lower here, broken a demand, however you want to see it. And so that's a good indication that maybe targeting here might not be wise. If the areas of values are small, you could have two trades. One short-term trade, exiting here. One trade where you break even and try and hold until price gets there. You compound, right? That's EURJPY. And then lastly, what we need to familiarize ourselves with today, and no, not today, but in these sessions, will always be the Ftse 100 because that's what's open right now. Sometimes it's called Ftse 100. Other times your broker will call it UK 100. So instead of focusing on the NASDAQ in these live streams, we'll be looking at this kind of stuff, right? So this is the Ftse 100. It is the top 100 companies in London, right? Top most traded, blah, 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 blah. I've never done it. I don't do it much in the war room. It is an index like any other index, you know, give it its flowers, give it its respects. We can see there's a strong buy profile asset. Let's find another broker. I don't like this. I like brokers that give me a whole lot more data. Otherwise, if that happens, then I'll just go straight to my live account and we can analyze it from there. Because you want to see, you know, okay, May 2017, that's good. You see what the other brokers were showing you. The other brokers were showing you an all-time high. Look at this nonsense, right? That's crazy because we know our strategy requires us to identify major turning points. We know that MTPs are important. So when you get a broker that gives you something like this, just know, right, it's trash, right? So spend time. I mean, it's different if it's your live account, but this is better. All right, there's a major turning point here. What do you think is going to happen, right? Right? Markets are back to confronting a specific strong area. And this is actually a cool index. Do you know why this is a cool index? It just proves to you why I thoroughly believe in my heart and I'm not blowing my horn. And after 10 years from now, the whole world will know why I kept saying this. I fundamentally, based on everything I've learned in the markets in all these years that I've been studying the markets and everything that I know and I've seen via research, which is what I am an expert in. I'm a researcher, a social scientist by profession. I do not blow my own horn when I tell you I fundamentally have the best course on how to trade out there in the world right now. This major turning point, which I teach in my module 1, was created in 2008. If you wanted to make a killing, I mean, I didn't even look at this chart during COVID. I did not. I don't want to lie to you. But if you wanted to make a killing, you would have used week 1 and 2 of my module 1 and made money without understanding the science and the ramifications of COVID. Because when COVID happened, it just somehow coincidentally aligned with a major turning point. Why? Because nothing is random in the markets. This is where Ftse was dropped the first time for a big run. This is where Ftse naturally fell. There's the big fall that I'm referring to. Look at the month, February of 2020, January of 2020, COVID. But you would have known to sell way ahead of time because of this, right? Fresh touch into this zone, retest into the zone, markets drop like crazy, right? But anyways, neither here nor there. Familiarize yourself with the Ftse 100. This will be my biggest request for you this week. We are now in interesting territory. We've re-entered a major turning point, which has obviously suffered from incredible glass effect. As you can see, the sell pressure needed, the sentiment being COVID, and Ftse recovered in March like every other risk asset. This is interesting because we're on the governing time frame. I just want to break Ftse down and then I close because I don't even look at it in war rooms, right? Sorry. Right, so this is quite interesting. at the back of our minds, don't forget the long-serving monarch, the Queen of England, has COVID. Ooh, ooh, ooh. You know, as people of a colonial nature, I don't know if that really matters, but it's out there. The Queen yesterday, I think I showed you guys in yesterday's headlines. I'm pretty sure it's now old news. There she is. There, she's suffering from. She's tested positive for COVID, but she's got 3 vaccines. I only have 2. I don't know what the third one is for her. Maybe it's one for the Queen or it's a booster, whatever. She's 95 years old, so time will tell. But price is at a supply. While all of this is happening, price is now located in a supply, almost ready for anything, in my humble opinion. If I drill down to the monthly, and I'm just gonna quickly just kill the noise and go Hakini Hashi candlesticks. I want to assess my major turning points as best as I can from a weekly perspective. I want to thoroughly understand what I'm looking at. So if this was my highest point in this entire chart, when I trade Ftse, I like to use arbitrate. I don't know what brokers you have. When I trade indices in general, I like to see that live spread on arbitrate. Right. So I've been sending emails year after year asking TradeView to incorporate arbitrate charts in here, but I guess it's just me asking, so it's not important. But when someone else powerful asks, or many people start to ask, eventually they do it, right? So with a value-based, a rally-based drop, right? A peak supply in 2018. Then we had a strong touch to that in 2019. Why 2019? 1 year, 1 year, 1 year. That's why. And then in 2020, price came back like it was programmed for a retest and tore the living daylights out of this index, right? It just ripped this index apart. Now, price, if I can do this now, this line, don't forget, is just the monthly area of value. This is my weekly supply. I just want to understand this index, guys. Personally, I haven't seen it, but I'm done for the day. If you have to go, I appreciate you. You know, I'll be another 5 minutes. I don't want to hold you, but I just want to make sure I thoroughly understand what's going on here. And then on my weekly, after price flirted with some serious sell pressure with a fake out. Be very careful. Don't know why, but this is becoming a thing in price. That is not an engulfment. To me, that is not an engulfment. The red candle has to open above or at least equal to the green candle. That is not an engulfment. If anything, 3 weeks from now, it'll be like, oh, this was a red candle, it's a PCP. Be very careful. Be very careful of that, right? When price engulfs like here, markets dropped. When price engulfed like there, markets dropped, then came back up. I don't know what price was doing last week, but that was not an engulfment. It's just a big candle reacting to the war, not an engulfment. So we could assume a slightly further push to the upside. I come to the daily because there's nothing on this side that's affecting me. I'm gonna kill the noise. Kinihashi candlesticks. Can't see much really. I mean, there's a little bit of action there, and then you can see one green day in the Ftse, and then price has been dropping. So the momentum is currently dropping. On normal candlesticks, you'll see green, red, green, red. But for me, the momentum seemingly seems to be dropping a little bit, which is not surprising. We are in a monthly supply. We have a strong weekly supply above us. And it's also historically, since 2018, why arbitrate for indices? Yeah, Trevor, it's not a bad thing to have them anywhere else. It's just that I like arbitrate for how it prints candlesticks. So arbitrate, because of our playbook, has a tendency to print every single 365 candle and every single complicated 365 candles. Other brokers, and when I used to do the back test, which was about 2 to 3 years ago, I don't know if things have changed, but when I back tested everything before I started selling my course, other brokers would do this Hakini Hashi stuff. And sometimes an order block in real candlesticks, not even in Hakini Hashi, will be painted over as green instead of red. Right. And we know that our order blocks for indices are very sensitive and important. So I want to see every single 365 candle, every single complicated 365 candle. I don't want them to just paint it green because, you know, there wasn't enough selling and they make it a green doji. Arbitrate makes the effort to print the candlesticks, you know, as they should be according to our strategy. I hope that makes sense, brother. Right. So on the daily time frame, I'm seeing some, slightly strong push to the upside again. That is not a bearish engulfing candle. That is not a bearish engulfing candle. This is a turning point. right? But there's a difference between module 1 supplies and module 2 supplies, right? So we've got 1, 2, got a retest, right? There's not strong momentum. So I'm assuming that an H4 supply is currently calling the shots. I have to assume an H4 supply is calling the shots. You know, I could use that one a little bit ugly. This is a little bit better. Price came in. Yeah, and the H4 supply is definitely calling the shots. Right. So today I'm going to do nothing with the Ftse. I'm going to see how it plays out. We are in bearish territory. If one was to do a supply and demand curve, you would know we are in bearish territory. I'm going to let markets open strong. Just going to check the opening 1 hour time frame. Right. So just like all the euro pairs, there's just like unisense, right? Why I'm showing you this stuff is you'll start to notice price actually moves in uniform and drops in uniform if you know what you're looking for. This to me is a bit worrying. This low, somewhat of a new high, markets come back and then close lower than this low, breaking structure, and I'm pretty sure this has also been broken. Draw a line here. Markets are breaking structure. So markets are trying to pull one over a couple of traders. So we need price to close higher. So you can watch out for this in the New York session. See how price did here, right? You'd need price to close a little bit up here by end of day today to close to clear some highs, right? Because you can see we had 1, 2. So we need something like this, right? A higher close. And then when we get a higher close, we're going to have to need a higher low. So maybe buyers would want to buy somewhere. They're cowboys. You guys understand what I just did? I'm simply looking at higher highs and higher lows and market structure. But I am warning you that the fact that markets broke a structure first before coming down, for me, is a little bit worrisome. So I'll be doing nothing on this trade. You know, if I was to buy, I would buy down here if I was to buy. I would want to buy down there, but I don't want to buy because markets right now are giving me a downtrend vibe. So I'll see how price closes here, and we'll both see because we'll be both here tomorrow to look at this. Guys, thank you so much. I mean, the last index, all of this took time today because I was teaching. I want to repeat that. Index GR40, GR30. I didn't even know DAX was now 40. I need to remind myself. I haven't looked at these indexes in a very long time. I won't lie. I've been very much, you know, American-based news. But anyway, this is the German index. Very aggressive traders are here. You know, sometimes you must go back to your roots, the things that made you the most money, right? They're aggressive because these guys, they sell. You'll see the DAX is going to move today when PMI drops at 10:30 in about 3 minutes. In about 3 minutes, right? But the weekly time frame, you know, price is, yeah, this is a chart I used to look at. So in the next 3 minutes, price is sluggishly been, you know, working its way down, sluggishly, like consolidating at the top there, sluggishly working its way down, right? So for European open is strong, but the index is actually quite weak. Right, this was the COVID fun ride last year where the chancellor just kept saying stupid things on the news and would sell immediately. She would say something like, everyone's going to die. You know, actually, and the chancellor in Germany, by the way, she's in charge of the Reserve Bank. She was so pessimistic about COVID. It was shocking. And so, you know, the sell down for the DAX was entertaining. I don't even remember buying this thing up. I literally used it for how aggressive they were on the downtrend. When you see on the weekly time frame a gap, you have to imagine how terrible the sentiment needs to be, right? Gaps are big on small time frames. They signify a massive imbalance. But on the weekly chart, you'll never see a currency on the weekly chart with a gap. But the DAX will have. The DAX is very prone for this kind of stuff. Right, so for me, I'll watch the war and then I'll come back to the DAX. Ladies and gentlemen, I hope this has been useful to you. Have a good day, stay blessed, and see you tomorrow at 9 a.m. 8:30 a.m. I clearly am failing you guys, so let's just keep this at 9 a.m. Promise you tomorrow will be 30 minutes tops. Good luck, traders. Cheers. I'm ending the stream. Goodbye.